Darcy Marud of Western Exploration. The symbol is WEX on the TSX Venture. Just to give a little background to people who listen to this conversation, either live or in the future on YouTube or on here. I met Darcy in Vancouver in January 2023 at VRIC. He was introduced by a mutual friend. I learned a little bit about the company at that point in time. I followed it since. There's not been a lot of news from the company, but it's picked up a bit in recent months. So I followed it, and I then this week I picked it as one of my 2023 tax loss list, which I do every year. And I just feel like it got to a level in the last month where it offers an attractive risk versus upside speculation on gold in a great mining state. So Darcy, I'm not going to do a whole lot more talking. I'm going to give the floor to you and tell us about the company and what your plans are.
Yeah, great. Hey, thanks, bud. Appreciate the opportunity to speak with you and your group. It's always a pleasure to talk to knowledgeable people about the industry and get the opportunity to talk a little bit more about our company. So as you said, Robert, we haven't had a lot of news, but that doesn't mean we haven't had our nose to the grindstone, boots on the ground kind of thing. And we've been very busy at site this year doing geophysics, metallurgy, and drilling. We released one drill hole about 2 weeks ago, WG 456. And I'll start with that to just put a little bit of context on the thinking of the company and what the significance of that drill hole is. So, Western Exploration has a very high quality asset called the Aura Project in Northeast Nevada. It's just north of Elko. You can get there by highway. It's only 3 kilometers off highway. Power line goes right down the road to it. We've got permitted water wells sitting on site already. So infrastructure is in place, high quality asset with great geology on the north end of the Independence Trend, which hosts the Jarrett Canyon mine only 20 kilometers to the south. So very good address, very good jurisdiction infrastructure in place. I think I need to start there. But going back to that WG 456, I think it highlights what this company is all about, which is grade. We're grade driven and grade focused, Robert. 456 was drilled in a part of the Gravel Creek deposit that has some high grades, but is not in the current resource. The idea with the 2 holes that we completed this year was to do that with orientated core so that we could look at those high grade intercepts and say, how do they connect together and how do they connect to the major resource of 800,000 to 1 million ounces we have at the Gravel Creek deposit currently. 456 was the first hole we released to indicate how we think those things are going to connect. We saw up to 65 gram per ton gold equivalent. We do talk about gold equivalent because we can extract the silver with the gold. And that led us to, interpreting 457, which we'll be releasing here in the near future. But both of those holes are indicating that we've got very good continuity of high grade veins to the east northeast of the Gravel Creek deposit in an area where we have drill holes already with very good high grade values, but no resource. So the thinking is with the company, we've got those drill holes done. We now know what we think the orientation, everything is to go back and in the short term do drilling there to bring that into a future resource upgrade for the Gravel Creek deposit. So I can't overstate how significant that is, that it's driven by grade, by the proximity to a known resource already, that we think these are going to go and be accretive to in the near term. The geophysics that we've done is going to highlight the exploration potential at Doby George and the other areas of the Gravel Creek and the Aura project in the future. So, I won't spend a lot of time on that, but know that that has been done and that that's going to be important for the future exploration at the project as well. Metallurgically, we've been doing a lot of work on the Doby George deposit, which is about 8 kilometers east of Gravel Creek. It is an at surface oxide deposit of just over 500,000 ounces of gold, but about a gram per ton gold. So very high graded outcrops right on surface. There's over 800 drill holes in it, so it's well delineated. The resource is understood. And we'll be coming out with that metallurgy here probably in the next 2 to 3 weeks. And I think it'll confirm what we said before, which is a minimum of 70% heap leach recovery. Very simple metallurgy, oxide, no deleterious elements, very low consumption of cyanide and other reagents. So we're working at two prongs here. One is the Doby George deposit, de-risking that to get that to a pre-feasibility and production decision in the short term. And on the other prong, it's about a discovery process that we're carrying on at the Gravel Creek deposit. Now, remember, Gravel Creek was discovered by the company in 2013. So this is a discovery that was made by the company. These discoveries always take time to kind of try figure out how they're going to come together, how big they are. I think with the release of 456 and 457 to come soon, we are starting to tell the tale about how this deposit is going to grow significantly and not only grow in size, but grow in grade. So, very high level, that's what we've done over the last 9 months with the company. We're very efficient with our spending. We look at it, we say only 2 drill holes. Those 2 drill holes were orientated core. They went down to a depth of 800 meters. They tested a hypothesis that we are about to confirm that's going to indicate future exploration upside on that project. So we're very excited about what we've done this year. I think as those results come to market, people will begin to understand how much high grade potential exists around that Gravel Creek deposit and how close we are at Doby George to getting that to a pre-feasibility level of study and ultimate production decision.
Okay, yeah, that's a good introduction. So let's start to break it down a little bit. So I'm looking at your presentation. You have a 43101 compliant resource updated in 2021. And I'm just doing these round numbers, so don't hold me to it, guys. I'm just doing math in my head. About 1.2 million ounces of gold, a little over 9 million ounces of silver in all categories. And I'm looking at the indicated 1.43 grams per ton gold equivalent is the average grade of the indicated. So knowing this region of the country, the gold mines in this area, there's quite a few of them. 1.43 grams per ton is a pretty good average grade. I mean, if you have near surface in oxides, zero point 0.5 grams can work if the metallurgy works. So this looks very attractive to me, but maybe there's some more details in terms of some of it is in sulfides, not all of it is in oxide. So can you tell us a little bit about that, Darcy?
Yeah, I can, Robert. And that is, you're pretty much right on the money with the numbers you quoted. Now, the caution I would provide everybody when they look at that is it's a little bit bipolar in that the Doby George resource is oxide. And it's about 1 gram per ton oxide, again, right at surface down to a depth of about 125 meters. Gravel Creek, on the other hand, is all sulfide, and it is about 5.5 to 6 gram per ton. So when you do the combination based on tons, there's about 14 million tons at Doby George, about 4 million tons at Gravel Creek. When you do that calculation, you get to that 1.43 average, but it's misleading because it underestimates what the real grade is in the sulfide, and it overestimates a little bit in the oxide. Now, the Gravel Creek deposit being sulfide, we've got a lot of feedback from people that, is it refractory? How can you treat that? And the short answer is yes, it is refractory to cyanide leaching as whole ore. But what we've done in the past is some metallurgical work that indicates it produces a very good concentrate. So all the concentrate does is you crush the rock and grind it to about 180 mesh, which is very fine. You float it in reagents and it concentrates in a foam or in a solution on the surface, all the sulfides and all our gold and silver occurring with those sulfides. So we can pull 95 to 96% of the 6% of the gold and silver to a sulfide concentrate, and that is 8% of the whole ore weight. So it's a very concentrated product that we produce out of Gravel Creek. And that product has an average grade of almost 4 ounce per ton gold and over 50 ounce per ton silver. You can then look at treating that concentrate under toll milling requirements or agreements with somebody like Jarrett Canyon, which is 25 miles away. You could send them, you know, a couple hundred tons of concentrate at those grades a day and be rewarded for the high grade that that concentrate has. In addition, we've looked at just cyanide leaching the concentrate, and we're getting up to 60% recovery of the gold and silver with just a cyanide leach of the concentrate without a regrind. So we'll do additional test work on the sulfides to see if we can finer grind the concentrate, so only about 10% of the whole ore, and then intense cyanide that to get to doré. So I think we're looking at paths for that sulfide mineralization, but we have a minimum path right now for producing a concentrate for sale. But I think we do have a path to even producing doré on site. So again, going back to that resource, a little bit bipolar. The oxide at Doby George is about 1 gram per ton, but very easily heap leachable. And we're going to put out that final metallurgical work here in the next couple of weeks. And then the Gravel Creek deposit is more sulfide, but definitely produces a very good concentrate, Robert.
Got it. Got it. Okay. So that makes sense. So I'm looking at news that you put out over the summer about gold extraction from met testing at Doby George. So you averaged 69.3% gold extraction. What is it looking like the follow-up testing is going to show? Is it going to be about the same? Could there be some improvement? What can you tell us about that from the network at Doby George?
Yeah, sure. So that work you're referring to was the bottle rolls, which is, a very simplistic first pass just to say, is it oxide or is it not? Is it heap leachable or is it not? And, at 69% recovery with the bottle rolls, it indicates it's generally very oxidized and very amenable to heap leaching. So when we got that data back, and that wasn't a surprise based on past metallurgy, when we got that data back, we immediately used that to create 16 different columns. And these columns are basically just the crushed ore to various sizes. We did 1/2 inch and 2 inch that are in these plexiglass columns that are about 10 feet tall and about 8 inches wide. And you just percolate cyanide solution through them for a determined period of time to find out how it leaches in a simulated heap leach environment. That test work is just wrapping up, but we anticipate that it will show a 70 to 75% heap leachable recovery. That would be roughly in line, maybe a little bit better than what the historic column leach test work was done in the past. In the late 90s showed about 70%. We think we can get a little bit better than that, either through reagent usage or through a finer crush size. We did do some columns at 1/2 inch just to find out how much of a benefit we'd get to recovery by doing a finer, tertiary size crush. So that's information we'll be getting out there soon. That bottle roll heap work that we did and we released also indicated that the reagent consumption for cyanide lime is very low. So, we often forget about that we can get good heap leach recoveries, but if we're spending a fortune on our reagents, our operating costs are affected by that. We see here that our cyanide consumption will be less than 1/2 kilo per ton of ore, and that the lime consumption should be about 1 kilo per ton of ore. So very low reagent with very good recoveries, Robert.
Okay, that's good. So Doby George, lower grade, but near surface, mostly oxides with recoveries roughly 70% to 75% with the met test work to date. So moving to Gravel Creek. And by the way, so just go on the Western Exploration website, pull up the corporate presentation, and I'm on slide 3, just, working my way down here. And the Gravel Creek area is the higher grade, but refractory, so you're going to need higher grades, and you're probably going to need some scale there to make that be economic at some point in the future. So you drilled 2 deeper holes there at Gravel Creek this summer. Tell us about that and the results that you put out and what we can expect from the second hole.
Sure. So I would say first and foremost, Robert, that Gravel Creek is part of a much larger system. The discovery of Gravel Creek goes back to the Wood Gulch deposit, which is immediately to the west. It's about a kilometer away to the west. Wood Gulch was mined by Homestake in the late 80s, early 90s. They produced about 120,000 ounces of gold there, at about 3.4 gram per ton gold, about 24 gram per ton silver. So a gold equivalent, really. But when we acquired that in the 90s, the geologists did the mapping and they said, okay, the ore here is controlled by a contact between older sediments and younger volcanics, and these big northwest and northeast faults. And those are the plumbing systems that bring fluids up to that contact. And when it hits that contact, boom, you have a deposit. So the geologist said, well, that extends off to the west. So they drilled the first hole, which was hole 373 at Gravel Creek. And boom, right at that contact where Wood Gulch is hosted, they hit like 29 meters of almost 4 gram per ton gold and 50 some gram per ton silver. So the first hole confirmed that the Gravel Creek deposit occurs at the same geologic contact in the same context as the old Wood Gulch mine. Since that discovery hole, there's been about 85 holes drilled at Gravel Creek to get to that resource that you've quoted, Robert, at about 800,000 to 1 million ounces, depending on whether you use a 3 gram or a 2 gram cutoff. So we think that Gravel Creek is part of that whole Wood Gulch system. And by extrapolating the geology, if you go from Wood Gulch to Gravel Creek, you have a kilometer of permissive geology that's got only 3 drill holes in it that have ore grades at that contact again. And as you move to the east and northeast, that geology continues for an additional 2 kilometers with the same geophysical signature, same geological signature, and any drill holes that were drilled in there have hit mineralization. So when we look at that, we say, okay, we've got 2 resource areas, but they're just kind of the tips of the iceberg within a much larger area of permissive geology, geochemistry, and geophysics. That highlight area was immediately east of our current Gravel Creek resource. The other targets are all valid targets, but the highlight area was that area immediately to the east because we already had multi-ounce gold and multi-kilo silver intercepts there, up to 40 gram per ton gold and over 1.5 kilos of silver from past legacy drilling. So when you have that kind of grade right adjacent a deposit, just hanging out there, we thought, okay, with
Did you get a phone call, Darcy? Sometimes this happens.
456. Yep.
Okay. Are you there?
Oh,
Okay. Sorry, I just
yep,
couldn't
I'm
hear
here.
you for about 10 seconds. Okay. Keep going.
Oh, okay. Sorry. Yeah, no. So we drilled that east northeast area, knowing that we've got legacy very high grade hits there adjacent a current 4311 compliant resource. So those first 2 holes, 456, we released. 457 should be very similar to 456. But more importantly, 457 and 456 together with the legacy drilling will give us an indication of how everything connects together for future drilling. Once we establish how everything connects together, we're off to the races to do infill drilling over the next 12 to 14 months to bring that into resource. So do we need a larger resource? Yeah, we do, because it's underground, it's sulfide. But I think we've got the area right now where we can do that in the short term, and not only do it, but with higher grades. And I like to look at these deposits and see them as a finite source of metal, Robert, and bear with me on this, everybody. But if you've got a mineralizing system that's carrying gold, if it's 20 meters wide and it averages 5 grams, we call that 100 gram meters, 20 meters times 5, 100 gram meters. The same amount of fluid in a 2-meter structure, 2 times 50 is 100. So you get higher grades when it's more narrow than you do when it's wider in the same mineralizing deposit. That's what we're seeing in the hanging wall or to the east. We're seeing narrower veins, but much higher grade, identical to the Gravel Creek resource. So going back to your question, Robert, at Gravel Creek, remember, it's 20 meters wide in the current resource at 5 grams. So that width is going to allow for lower cost bulk mining methods. So at 5 grams per ton, we should be very good for operating costs with that grade. And then as we move to the northeast, it's narrower, but the grades are going to offset any higher grade. So we've got a combination of very wide, moderate grade, and narrower, very high grade that are adjacent to each other. So additional drilling there, if we can pull all that together and add it to the Gravel Creek resource, we could be looking at doubling the Gravel Creek resource here in the short term, Robert.
Okay, so currently it's about 800,000 ounces. So you think that you can double it to about 1.6?
Just with that northeast target that we're currently focused on with 456 and 457, yes.
So with 2 holes, you can double the resource.
Well, no, that 2 holes indicate that area is where we can go back drilling now, and we drill next year to add that to the inferred resource. So
okay, so how many more meters and holes do you think that you'll need to put in there at Gravel Creek to get it up to that 1.6
yeah,
area?
bear with me on this, Robert, because we're just doing that work now, and certainly if you wanted more certainty, it's more meters. But our goal here, and we've always said this about the company, is not to drill everything to a reserve, but establish the footprint that a major company would look at this and say, we need that asset because we see the size potential there. So we would plan next year doing a minimum of 7,000 meters of drilling in about 10 to 12 holes in that area that we think should get enough information to get to an indicated resource in that hanging wall or that eastern area. Now, as we talk about that, that's one of 4 targets we have around Gravel Creek. So this is one, Robert, that we're talking about potentially doubling the resource with. The others would be followed up after that or concurrent if we can get enough funding at the same time as drilling that area. So we're talking about doubling the resource with that one area to the northeast in the hanging wall, but we've got 3 other targets: that gap area up to Wood Gulch, the extension of Wood Gulch along the feeder zone to depth, and the northeast extension of Gravel Creek that we haven't even talked about yet.
Right, yeah, I'm looking at that slide 14, and I see that gap area, and that does look like a pretty attractive target. So I've got a few more questions for Darcy, but if somebody else does, please raise your hand and ask to be a speaker, and I'll call on you. I see we have Eric Coffin here. Hi, Eric. So you announced hole, the first hole of the program, which is, I guess, hole 456. Yeah. And I noticed that you put 5 intervals in here. I guess that's the way that you felt it was best to do the presentation of the results. But we have intervals like 4.7 meters of 9.2 grams per ton gold equivalent. It's gold and silver, so those are the only two metals in the gold equivalent grade. But yet you have 5 intervals between 2 and 5 meters there. What did this look like over the full length of the hole, Darcy?
Well, it's all altered, and again, those intervals that we quoted there are kind of in that structural corridor that we were targeting, right? So that was the main target, and that's why we quoted those intervals there, to highlight that the target was tested and it's got 5 intervals within it of good gold and silver mineralization. The entire hole is strongly altered, which explains our geophysical anomaly, resistivity, and chargeability in that area. It explains what we see at the surface for alteration, but at the appropriate cutoff for an underground deposit, which is 2 to 3 grams per ton, those are the intervals that stand out. There's lower grade material between some of those intervals, but at that depth, because you're not going to be able to do an open pit, they're not going to be economic. So we're being very critical of ourselves here on what makes economic sense from our drilling. I also want to highlight, Robert, in that hole, we abandoned that hole due to drilling difficulties, but it was still in strong mineralization right at the bottom of the hole. So the whole target was not completely tested yet.
Yeah, so I noticed that you had a bullet point there. It was abandoned at a depth of 730 meters due to drilling complications, with the final 3 meters of returning 5.42 grams per ton gold and 113 grams per ton silver. So, I mean, even though that is super deep, that's really good grade there. So, is that something that you intend to follow up on, because it did end in such strong gold and silver grades?
Most definitely, we'd be following up on that, Robert. And I would just like to highlight that we don't know the depth at that point to get to those lower sedimentary rocks. And both of those holes were targeting the overlying volcanics. And because of the strong nature of the alteration and mineralization in those holes, we would have to drill deeper holes to even get to that contact below this alteration to see if there's footwall style mineralization at that contact below these holes. So we haven't even tested that target yet or considered that target. So these two holes, again, were really defined or designed to test these old intercepts and try connect the dots, which I think you'll see shortly that we can connect the dots, and that it's going to highlight a series of parallel high-grade veins sitting out there in the other side of the Gravel Creek deposit, and that additional drilling is going to need to be done to establish, the connection, but also, extend those holes to depth to see if we've got additional mineralization right at the contact with the older sediments.
Got it. Okay, so
This is a big area, Robert. I mean,
right.
we, both Mark and I have worked for, Meridian and Yamana in the past on some big projects, and the scale of the exploration that's required to do here is not any different than what we've worked on in the past. It is a large system that's going to take years of drilling to fully define it. Now, as a junior company, our focus will always be on the most immediate, highest opportunity targets where we can guarantee success for our shareholders and do it most cost efficiently.
Mm-hmm.
So you won't see us drilling 2,000 meter deep holes to
Thank
test a
God.
hypothesis.
Thank
Yeah, no,
God.
we're not going to do that. But we're chasing the most obvious things. And I think when we're dealing with, and you've highlighted it, 4.7 meters, 2 meters, when we're dealing with those, you need grade at that depth to be successful. This comes from my experience at El Peñon, where I worked for 20 years. El Peñon mined deposits down to a depth of about 500 meters that average about 2 to 2.5 meters wide. The minimum mining width that we used at El Peñon was about 2 meters. So if you can do 500 to 700 tons per day at 30 grams per ton, it's not a bad deal. So the way we look at Gravel Creek going forward is we have one part of the deposit that's 20 meters wide at 5.5 grams, bulk mineable tons. And then we're looking at a higher grade portion where if it all comes together, it'll be smaller mining, but higher grade. So you've got a combination of best of both worlds there.
Okay. I feel like we could talk for a couple of hours, and maybe we'll have a chance to do that in the future, and maybe in Vancouver in January. But for now, I want to ask you two more questions and try to keep it as concise as possible. I get what you're doing there at Gravel Creek. I get the project there at Aura. I get the upside. I get your plan for the future. Actually, I like three questions. So the first question is the timing of hole 457, and then I want to talk a little bit about the project history and the share structure. So number one question, can you give us some idea of the timing on hole 457? And then a follow-up to that would be, can you tell us about the largest shareholders of the company?
Yeah, 457 will be early next year. We are just getting the final silver numbers in for that. They had to go for reassay because we got some pretty high silver numbers, so they had to go to reassay. But that'll be out early next year, I think. I don't think, I know it will be. The share structure and some of the largest shareholders, the share structure is pretty tight at about 34.5 million shares. And I think that goes back to the fact that the company is only about 2 years old on the public markets. The largest shareholder by far is a company called Golconda LLC. It's a private equity group. It was founded in 2013 by the Schlumberger family, by Marceau Schlumberger and his father, Nick Schlumberger. Within Golconda are 70 high net worth and individuals and family offices, principally from Europe and the Middle East. Some sovereign funds from Saudi Arabia, Bahrain, Qatar are in there. They've been very big supporters of the company. And since they recapitalized Western as a private entity in 2013, they've contributed about $30 million US to the company, mostly when it was private. And that was what led to the successful delineation of the resource at Gravel Creek, because they put money in to finance the first drill hole, which was 373, and financed it all the way to that technical report. They're diluting their position because it's a closed fund. They can't contribute any more capital through the fund, but the individual shareholders within the fund are participating in the company's financings individually outside of that fund right now. Our second largest shareholder is Agnico Eagle. Agnico contributed 2 rounds of financing, one in 2017 and one in 2020, entirely focused on the Gravel Creek discovery. What they liked about it at that time, private company, unhindered, no debt, but also a brand new discovery with very good grades in an untapped area of Nevada. So they realized that potential early on and said, we'll take a kick at this can. So they put in $7 million in 2017, which was all used to drill, and in 2020, which was all used for drilling as well. So they own about 16% of the company right now. They are on our technical committee, so we consult with them on a quarterly basis, update them on results and stuff. So they maintain a strong interest in the company. And then institutional shareholders, our 2 largest are Europac, which is Peter Schiff and Adrian Day, and Oramet, which is a refining company out of New Jersey. But Oramet has an equity investment arm, and that Oramet investment goes back to the history we've had with them for probably the last 30 years, since the El Peñon days, that they're big supporters of management. So that's kind of our share structure and our major shareholders, Robert.
Okay, got it. And then I guess we don't have any questions from the audience, but I'll open up the floor again. I guess my final question is, look, 2023 has been a very challenging year in the junior mining sector. There's no doubt about that, and any investor in the sector is fully aware of that. So it's not a shock that your share price is down in 2023. But I would say that the performance since April is especially poor. I would say. I mean, you're down more than 50%, so it's pretty bad.
Yep.
Sorry, I'm just being honest.
No, all good.
Do you know why the performance has been so poor? And do you have anything you can let us in on that you think maybe the worst may be in the past?
Yeah, I really can't put my finger on why the performance was so poor, other than a couple, kind of suppositions. Is, I think Western in the past has done financings at a pretty favorable share price, $1.40, $1.55. And I think at that number in a junior mining space, it just looks like a big number, and it's been traded down a little bit because I think maybe some people thought we were getting a little higher premium than other junior companies. So we traded down to be in par with our peers, even though I don't think our project and our resources are in par with a lot of our peers. I think we've got, and every CEO will say this, I think our project better than the next guy, but I really do, because of the advancement we've done at Doby George and the high grade potential at Gravel Creek. I think that should separate us. I think second, there was some banter in social media back in June, July about Aura that I think highlighted the Aura project as being something that it's not, maybe closer to production. There were some promises made by unsolicited parties about the project that I think got ahead of it. And then when we didn't deliver on that, I think that created some havoc in the social media space that we paid for. And again, that was unsolicited to us and by us. So we just saw that happen, but we didn't comment on it and we didn't participate in that. But I think those kind of commentaries nowadays can weigh on a company. And I think we're through that. But I would encourage all our shareholders, anytime you have a question, pick up the phone and call me. I'll tell you exactly what we're doing and what we're expecting to do. And it'll be unfiltered and it'll be to the point. We are proud, Robert, that we just put our nose to the grindstone and our boots to the ground. And that's what we've done during our whole career with the companies we've been with. And that's what we're going to continue to do here. So, the results that we deliver are going to be unfiltered, and they're going to be, to the best of our knowledge, um, you know, based on economic criteria and the results that we have on how we see the project going forward. So again, we have traded down with pars and maybe a little bit more up front, but I think the results we're going to put out, and we don't only put out results, we're going to put context with those results, Robert, on what it means and how it affects everything now and going forward. And I think as we do that, I think people will come to appreciate a little bit more how advanced Doby George is and how much high grade potential we have at Gravel Creek.
Okay, fair enough. Final question, I promise. How many? What percentage of the company is owned by management and the insiders of the company, and how many shares do you own, and what is the cost basis on those shares?
Yeah, so it's about 7% of the company, 6 to 7%, somewhere in that range that's owned by insiders. And I'll just say that that percentage owned by insiders is not equity issuance. That's actually purchased in private placements or on the open market. So that wasn't given to the insiders. That was earned and purchased. Myself, I hold about 250,000 shares, and my cost basis would be above $2 a share Canadian.
So, so you paid for all those shares?
Yes. Yeah, no, I bought them. I bought them through various private placements. Well, no, let me backtrack. The only ones I have not paid for, no, I paid for all of them because I have received about 20,000 restricted shares, but
Okay.
I pay for those. There's a cost to those. It's below market cost, but those are about $1.65 Canadian that I paid for those. So again, above the current market price. I continue to participate in the public market when I can on purchasing Western shares. Of course, I can't when blackout period when we have confidential information. But if we're not, I've been an active purchaser in the open market.
Yeah, I see. You did a filing on November 30th. You bought 5,000 shares at 52 cents. So I guess that was after you put out whole 456, and you didn't have the assays back yet for 457. Is that right?
That is exactly right. Yeah. And so I thought that was a timing that I could do it because with 457 being imminent and the metallurgy being imminent, I would be locked out of that.
Okay, fair enough. Darcy, I think this was a very informative conversation. I think we hit on a lot of key points. I think there will be many more conversations in the future, and I look forward to more from you guys and making me look good in 2024.
We will make you look good, Robert. We will make all of shareholders look good. I thank you for your time, Robert, and for everybody listening in. And I can't emphasize enough. If you have any questions, any concerns, any doubt, I'm only a phone call away. Pick up the phone, give me a ring, email me, and I'll get back to you. I always will.
Thanks a lot, Darcy. Have a great weekend. Cheers.
You too. Thanks, everyone. Appreciate it.